Oh, look, we even knew to preset the recording.
Yeah, and the Q&A thing is kind of cool too.
Yeah. I'm telling Reba I don't think we need her on this.
Okay.
And she has other things to do, and we should be good to go.
Sounds good. Do you think it's all right if I stay off camera?
You should be on camera.
Okay. I'll look a little droopy. Droopier than
That's fine.
normal because I'm already droopy looking.
I wouldn't say you're droopy looking, but you're just very chill looking.
Yeah.
Yeah. You don't have to be on camera right this second until we start with the farmers.
Yeah. I'm gonna try to finish some of this hub doc stuff.
There you go. Yeah, I really have no idea how many farmers are going to show up to this. I like didn't even think about it until Andrew asked about registrations. I was like, I don't think it gave me registrations.
It could be one or it could be 500.
Yeah. Yeah, I wonder how.
It's got to tell you, right? That's such a weird feature to not.
Yeah, I'm sure it's somewhere. I just don't know where it is. This is like the page. Um, Manage event. Attendance. Left meeting registrations. Yeah, it says 0 registered, but you registered, right?
I did, yeah.
Yeah, so not sure why it's not showing up anywhere. That's weird. Okay, well, we'll see. We shall see. Alan, I don't know if you know the answer to this question. Does our QuickBooks subscription entitle us to any personal support from a QuickBooks tech or engineer? Do we have an allotted amount of support time?
Joseph asked me that, and I am not sure. I don't know about the development side. The regular accounting support side is just kind of your typical, you know,
Yeah,
unlimited, but quality is hit or miss.
yeah. Hey, Susan, where are you calling in from?
Toccoa, Georgia.
Oh, nice. Beautiful there.
Wet today.
Yeah, actually, I hope Andrew's able to get into the webinar. Let me text him. I feel like we need some like hold music while we're kind of waiting for everyone to get started. I can just play some crappy music off my phone. Even though the running joke of good agriculture is I have the worst music taste on the team. We'll just have some Eagles playing while we wait. I don't know if you guys can hear that.
There's Andrew.
Hey, Andrew.
Hi all. Hi Susan. Hi Alan.
Hey, Susan. Hey, Andrew.
Andrew, we did have a question for you while we were waiting for folks to join. Good Agriculture recently started a YouTube channel, and we were wondering if we could share the recording of this there once it's ready.
That would be perfect.
Cool. And then we can also use that just to share it out with other folks.
Yeah. And any other links that y'all mentioned today, I was hoping to just kind of type them out and have them there for people.
Yeah, that sounds good. So I think we'll give folks like 2 more minutes, and then we'll start with introductions and whatnot. And then hopefully by like 5 past, everyone who wants to join has figured out how to join.
Glad you could make it, Susan.
Andrew, are you like in a storage room?
It's
What's going
partly storage. It's on my to-do list to get all this stuff to farmers, but I need help organizing it and getting it to them.
on? Oh, well, one thing we do is we do like quarterly farm volunteer days. So if you or any other farmers in your network need some non-farmer manual labor, that is something we do.
Yeah, I just had a request this week from Justin at Moon Farm to ripping out tomato cages for a new farm property he acquired.
Okay. I'll have to follow up with you about that afterwards.
How are y'all getting people or connecting people?
Oh, it's just our own team. So there's,
Oh.
6 of us plus some number of interns at any point, and we just do, go to farms once a quarter. We try to do something that's within an hour and a half of Atlanta, which is where we're based, just so it's not horrifying driving distance for everyone.
Got it. Did you say non-manual labor? Did I mishear that?
No, it is manual labor, but it's like
Okay.
non-farmer manual labor. So like we are not well, there are some farmers on our team, but Alan and I are not farmers. And so if you need us to do anything like specialized, like don't trust us with that kind of stuff. But it's like, hey, I need you to rip something out of the ground and I just need hands. Like we're great for that.
That's perfect. That's great.
Yeah.
What's going on now?
Sounds like someone's dialing in. I wonder if there's a way to. I muted her.
Okay.
All right. Well, since it's 3 after, maybe we can go ahead and start with introduction. So I will share my screen. All right. Can you guys see this? Can you see it in full screen mode? All right.
Yes.
All right, so we can go ahead and get started. So welcome everyone to a webinar about farm finances. We are co-hosting this at Good Agriculture with y'all at the Georgia Mountain Farmers Network. So we are super excited to have this session with y'all today. I know it is a super busy part of the season and, farm finances is not everyone's favorite topic, but it is important. And for anyone who filed for an extension on taxes, it is almost tax extension season. So hopefully this will be useful for everyone. Before we jump into the content, we'd like to do some introductions. So I think most of you know Andrew, but Andrew, if you want to introduce yourself real quick.
Sure, I'm Andrew with the Georgia Mountains Farmers Network. Our mission is to build community around local food. We have 3 main programs. Those are farm tours for the public to get out to farms. We have farmers markets that we host weekly. And then this is hopefully going to be a part of the Farm Resource Center, where it would be evergreen resources for beginning and established farms in the area.
Awesome. And I will kick off the introductions for the Good Agriculture team. So I'm Alex. I am the CEO of Good Agriculture. And what we are is we are a small business with the mission to free farmers from some of the back office tasks so that y'all can focus on what you do best, which is the farming. So we help farmers with their finances, the bookkeeping, the tax preparations, etc. We help with things like more advanced financial analysis and business cases. We help farmers find and apply to grants and other funding, and we also do some marketing for farmers. So I am not a farmer, as some of y'all may have heard me say. I actually have a total black thumb and can't keep anything alive. So I have a ton of respect for what y'all do and just love what I get to do every day and kind of supporting y'all and what you do best while I get to do what I do best. And I will hand it over to my teammate, Alan. Alan is a little bit under the weather today. So if he is a little bit scratchier than normal, please offer him some grace on that one. But I'll let him introduce himself real quick.
Yeah, hey everyone, it's great to be here. So I'm the farm finance lead, and I just have the privilege of helping our farmers. What I like to say is, achieve financial clarity, help just clean up data, do the bookkeeping, do the reporting and analysis. And a handful of the things that Alex mentioned there that we try to offer. I'm oftentimes the one kind of on the ground doing a lot of that day-to-day work. So yeah, I'm excited to contribute to this webinar today.
Awesome. And to set a couple of ground rules, please feel free to interrupt us with questions along the way. So I'm going to be leading most of this webinar, and Alan and Andrew will be kind of jumping in with color commentary and to answer questions along the way. But if you want to hear from them and not just from me, definitely feel free to ask questions. We will have time for Q&A at the end, but we are going to be covering a lot of content and not a lot of time, and so definitely let us know if something's not clear. Also, in your questions, feel free to give specific examples or ask specific questions from your farm, because all of y'all are kind of in the same region. A lot of you are growing the same things, and so an example from your farm is probably really helpful to everyone else on the call. Similarly, there is no such thing as a dumb question. This is complicated stuff. It is not core to the day-to-day work of farming. And again, if you have the question, I bet someone else on the call has the question too. And be engaged. So we will be doing some polls and some questions and whatnot in the chat. So feel free to come off mute and ask questions, or just drop questions in the chat. And Alan and Andrew are going to help me monitor the chat because I'm sharing my screen, so I can't see it super well. All right, so to kind of test out the chat and Q&A function, we're going to start with an icebreaker. What is the best $100 or less purchase you've ever made on your farm? Is anyone having trouble finding the Q&A function? Are we getting any answers coming in successfully, making sure this functionality works?
It's such a hard question.
It is a hard question. And I also, if I figured it out, I can't write it in the Q&A thing.
Oh, so the Q&A, is the Q&A not working for you?
This app may have issues in the web version of Teams, is what it says.
Oh no. Okay.
The chat works.
Okay. Yeah, if you can put it in the chat, that works too. We'll kind of treat the chat and the Q&A the same, since it's a bit of a smaller group.
All right, we've got a big hat or a small cooler for water. We've got
Yeah.
seeds
Right.
and a transplanting tool.
Oh, that's a good one. All right, well, feel free to keep dropping answers in the chat. I'm going to go over a little bit about what the agenda is today. So we've already done introductions. We're going to start with a little bit of how to actually manage your financial data, because that's kind of step one to be able to do the rest of this that we're going to talk about. And then we're going to kind of cover the basics of like, what should every farmer kind of know about their farm's financial situation. So we'll talk about profitability, and also talk about profitability ties into how to file your farm taxes. We're going to talk about making and losing money, money in the bank, budgeting and business planning, building wealth, and additional resources. So kind of next question for y'all. And again, feel free to drop this in the chat, or like, what are your goals for today? So we have a couple of different potential answers. So, feel free to say, 1, 3, and 5, or all of the above, or actually something else. I'm really excited to, learn about XYZ. So yeah, feel free to drop those in the chat. And then Alan and Andrew, I'll hold y'all responsible for making sure that we cover everything that everyone was hoping to talk about today. All right, so before we get into the fun stuff, whose financial data looks like this? And I will say, most of the farms that we work with come to us with some version of this, where it's a shoebox of receipts, or it is some form of digital farm financial management, but it's not really in a usable form. So it's a, it's a QuickBooks account that hasn't been updated in several months, or it's an Excel spreadsheet that's, kind of stuff's kind of scattered all over the place. It's a little bit hard to use. So if your financial situation looks like this, never fear, you are not alone. And we're going to first talk about like what are some tactics to kind of get to a point where you can actually use your farm financial data. So, what are some easy things that have worked for you to stay organized? And for those of you who have tactics you want to share, again, please do put them in the chat or the Q&A. And then Alan or Andrew, if you want to kind of share them with the group. But some of the ones that we have seen and we kind of help our farmers with. So the first one is have separate accounts for your farm and personal situations. So if you have one bank account and both the farm stuff and your personal stuff goes into that, it can be really hard for you to untangle at the end of the month and be like, okay, I went to Home Depot, but did I go to Home Depot for like a farm thing or a home thing? Like, I don't remember. Same thing with credit card accounts or debit card accounts or kind of whatever you use. Like, have a separate one for, a farm account and your personal bank account. And one of our team members, Kirsten, she is a farmer and she uses the same bank for both her farm and her personal accounts. And so the bank gave her 2 different debit cards, and the debit cards looked very similar. So what she did was she took green Sharpie and colored the farm one green. So it was just easy for her to keep track when she was making a purchase, which debit card she needed to use. Keeping data in digital forms rather than typing it in from paper statements. So most banks and card providers do offer digital statements in like a CSV or or spreadsheet form now. So instead of having to get the paper version in the mail and kind of like type it into the computer, you should see if your bank will give you an electronic version. They make that generally pretty easy to get now. Figure out a categorization system that works for you. So, this is, so Good Agriculture has like a standard set of categories that we use, and we're happy to share that with any farmer who's interested. But you know your farm better than any of us. So, if you have, 18 different types of vegetables you grow and you find it really helpful to track like, just summer versus winter vegetables, and that might be a categorization that makes sense for you. Or if you have vegetables and livestock, but, there's a lot of similarity on the vegetable side and a lot of similarity on the livestock side. You may just use those 2 categories. If you have a lot of, software costs because you're selling direct to customer, so you've got a Square and a Shopify and et cetera, maybe helpful to track the software stuff separately. So kind of just figure out something that works for you and then, set up like, some people have like different boxes that they put the different receipts in, or they keep track of it on a whiteboard, or they use it in the spreadsheet. So again, we do have templates for this, but figure out what works for you. And then I mentioned Square. So on a lot of these sales softwares, it's really helpful to take the time to set those up by product type. So when you're at the farmer's market and, someone buys something, you're not just typing in like, okay, I sold $20 worth of stuff, but I sold $20 of tomatoes, or I sold $20 of eggs, or whatever it is. And so at the end of the month, you can actually go through and see like, oh, I sold, $1,000 worth of eggs. That's more than I thought. Or like, I only sold $20 worth of tomatoes the whole month. I wouldn't have guessed it was that low. But if you just have like $1,000 worth of uncategorized sales, it can be really kind of hard to figure out what's going on. And then the last point is like, try to go through and categorize everything regularly, like at least monthly, like pick a rainy day or, the day after prepping for the farmer's market when you're tired and you want to just sit on the couch for a while. It's much easier to do this when everything is fresh in your mind. It's really hard to go in a year later and be like, again, what did I buy from Home Depot? I don't remember. Any questions on that before we jump into like the actual financial analysis piece? Or any other tips in the chat that people dropped of stuff that's worked for them?
Yeah, Austin says, I like this. He says, don't keep your files on your computer. Keep data on an external hard drive and in the cloud in case your computer dies, which I think is just really good tip.
Yeah, that's a great one. And actually, sharing another story from Kirsten, who's a farmer on our team. She kept a lot of this stuff on a Chromebook in her cooler. And then the cooler got broken into and the Chromebook got stolen and it wasn't backed up to the cloud. And so those were all her records. So yeah, great point, Austin. All right. So first I'm going to go over is just general farm profitability. And so first question for y'all is, does this farm look profitable? And also, if you guys are on camera, you can just give a thumbs up, thumbs down. And this is a little bit of a trick question because, so what this farmer did was she took all of her bank transactions and kind of added them up and categorized them. And this is what she got with all the transactions. But there were some things, some farm expenses she had that didn't show up in her bank transactions. So what might some of those things have been? So she's like a lot of y'all. Again, if you're selling at farmers markets, there's a lot of driving back and forth to the markets, right? So you may notice that mileage and vehicle expenses are not necessarily in here. There's another point around like where is the cost for like her tractor and her fencing and all the other infrastructure that goes on the farm? Where is that? And then the last point, like where's like the farm rent or the mortgage payment? The farm's got to be on some land somewhere, right? Like she's not an indoor farmer. So the point I want to make here is there are some things that don't show up just on your bank transactions. And so, if you have cash sales, if you have, like if you live on the farm and there are personal expenses like your mortgage that you need to split between the farm and your personal situation. We're going to talk about depreciation later when we get to taxes, but basically depreciation means like the kind of estimated cost of your equipment, even if you don't have to buy anything new that year. So you want to make sure that you are thinking through like, what are all of my expenses on the farm, not just the ones that show up because I swiped my debit card on something. And so this is important for two reasons. So one, before she added these things in, like the farm looked profitable, looked like she was crushing it. But now like she can see like, oh, actually this farm is like basically breaking even. But the second thing is, before she added all this stuff in, like she was paying a good chunk in farm taxes because if you're profitable, you got to pay taxes on your profit. But now she included everything and made sure she was holistic about incorporating this stuff. Like now she doesn't owe any taxes. So that's a big difference too. So any questions on, and so what this is here, it's called an income statement. It's also called a profit and loss statement. And it's kind of what it sounds like. It's just like, you can see up top, how much did the farm bring in revenue? And then we add in all of her costs, and then we subtract out the costs and we get a net profit. And so we're going to talk about financial statements a little bit today. And this is, there's three of them that are important so that, whenever you go to a bank, they're probably going to ask for, and the income statement or the profit and loss statement is the first one. Alan, anything you want to add here?
No, I mean, I think just highlighting the point that you made, what's really interesting about this is that in this case, something like depreciation is a weird one because it kind of helps you not owe a tax liability. And so that can be kind of a tricky thing where it's like, oh, my net profit should have negative. But because it's taking the value of your asset over the useful life of it, and we're kind of splitting it up, it can be kind of confusing, and I think we'll touch on this later, but this is why also comparing to the cash flow statement will be really important because that's where you will see all the cash that went towards purchasing major equipment and that kind of stuff.
Yeah. Looks like we have a hand raise.
Yeah, so you might touch on this later. Just a quick question. Would the template that you provide on like standard set of categories go into how to categorize certain things as cost of goods sold versus expenses? Or is that something that you can reference?
Yes. So in our template, we give kind of like our recommendation of, where things should go. This may not be like the financially acceptable answer, but if you put some things in cost of goods sold versus farm expenses, like it doesn't really matter that much. Like you should do what makes the most sense for your farm. And so I'm going to jump ahead a little bit because this question came up. So I'm going to skip through all this tax stuff. We will come back to it. Don't worry. And we're doing a little, don't look at the answers of this quiz here. Okay. So there are different types of profitability that can be helpful to kind of break down as a farmer. And so Andrew mentioned cost of goods sold. And so that basically means like costs that go directly into making the thing that you sell. So if you're growing vegetables, it's like the seeds and the compost, and like if you need to put them in baskets for the farmer's market, you might include that. Or if you've got livestock, it might be like the like this the feed and the veterinary care and the cost to like take it to the processing plant and get processed. All of those things would be cost of goods sold. And so why that's important to break out is because when you take your revenue minus the cost of goods sold, you get something that's called gross profit, which basically means how much money do you make on each thing that you sell. And why this is important is because if this number is negative, this means that the bigger you get, the more money you're losing. And so if your gross profit is ever less than zero, this is a really bad situation to be in. So Alan and I worked with a farmer recently who was in this situation, and we kind of helped them think through a lot of ways of like, okay, where do you need to increase your prices? How can you reduce your cost of goods sold? Because, again, you don't want to be in a situation where like every dozen eggs or pound of beef you sell, you're losing money. It looks like I got a question from Paul.
I do actually. Do we separate that out per crop?
Great question. So this gets into how much time do you want to spend on this and how much specific insight do you want? So in an ideal situation, yes, you would do this by crop so that you can get a real clear picture of everything I'm growing, how much money is everything making? Now in reality, especially if you're doing like market garden vegetables and you're growing 50 different things in the course of a year, it can be really hard to track. And again, things like Square, if you've got it set up properly, and again, like services like ours can kind of help with that, but obviously the more things you have, the more complicated it gets to track this. So like this farmer, whose data we're using, she had kind of like three main lines of business. So most of what she grew was strawberries, and she had strawberries that she would take to the farmer's market, and then also strawberries that people would come and do pick. And then she also grew kind of a smattering of different, seasonal vegetables for the farmer's market. And so for her, it was easiest to separate out the strawberries because that was such a big thing for her, and then just kind of lump the rest of the vegetables together. But yeah, if you've got like 4 main crops or, even like 8 main crops that are kind of driving most of your business, it may be helpful to separate those out. But also if you're like, this is overwhelming, I just want to track it all as like the farm and like the farm is making money, and so I'm good. People make that choice too, and that's still better than nothing. Yeah, that was an unwieldy answer, but it just kind of depends on like what do you want to do? What's helpful for you.
I can try to like summarize it by just saying like basically if it just depends on your goals. So if your goals are to just like stay compliant, like just stick with that Schedule F and those categories, just drop them wherever it's most relevant. And then you have that peace of mind of like, okay, the IRS is not going to come after me. But then there's also if your goal is more like, I really want to get onto this strategic kind of forward looking, start making cash flow projections and know which of my products are the most profitable, that's where you would want to start that more granular categorization.
Yeah. And then just to kind of explain like the other blue boxes that are highlighted here, since Andrew asked the question. So we talked about what gross profit is and why it's very important for that to be more than zero. But obviously there's way more expenses that go into running a farm that aren't, so like you got to pay your farm employees, whether or not you make, 1,000 pounds of beef or 2,000 pounds of beef sold at the farmer's market. And so all of these other farm expenses, you add them in, and then that's something called operating profit, which is like the cost to, run the farm day by day is the farm making money. And so, we like this example because when you add in all of these other costs, even though all 3 of this farmer's enterprises are profitable on a gross profit level, when you add in all the other farm expenses, we see that everything she's selling at the market is actually losing money day by day once you've accounted for everything, except for the pick strawberries. And then we added a few other things that are not about running the business day to day, but are very important business costs. So interest, so again, interest on the farmer's tractor loan and her land loan, depreciation, which is, again, we'll talk about this more, and then like any taxes she's paid. And then we get to what's called net profit, which is the real important number. And again, we want this to be positive. And so again, you can see here that the market strawberries and the market vegetables are losing a lot of money. The U-pick strawberries are making money. But if you added all three of those numbers together, you see that the farm is like slightly unprofitable, but it wouldn't necessarily be clear why. So Paul, to your point, this is why breaking out your crops can be really helpful. All right, so we have mentioned taxes a few times, so let me go back and talk about taxes. So, why we start with the profit and loss statement is when we talk about income taxes, the word income for a like tax purpose basically means like how much profit did you make? You got to pay taxes on your profit. And so there are a few forms from a federal tax level that farmers need to know about. So one is the Form 1040. Everyone should be familiar with this. This is just like your individual tax form that like you as an individual have to pay. Then there's something called Schedule F, which is a form that only farmers have to fill out. Profit and loss from farming. And so one important thing to know here is because farms are weird from a tax perspective and only farmers have to fill this out, a lot of like regular CPAs and like tax people don't know that this exists. So we have seen a lot of issues where people go to like a regular CPA to get their taxes done, and then the CPA fills out the wrong tax form because they don't realize Schedule F is a thing, and then it gets the farmer in trouble. So definitely make sure that if you're working with the CPA to get your taxes done, it is someone who knows ag. And, if they don't know what Schedule F is, like, don't use that person. Now, the nice thing about Schedule F is it's basically your profit and loss statement. So if you can create this thing, then you can just copy and paste these numbers from here into Schedule F, and it shouldn't be that bad. All right, the next thing is Form 4562. So this is a little worksheet that breaks down your depreciation. And we're going to explain what that is in a minute. It's a little bit more complicated. The last thing I want to highlight is Schedule C might be something that some of y'all need to fill out as well. So this is like the profit or loss for like every other business that's not a farm. And so if you have other businesses, so like agritourism, or you do value-added products, or you have like a consulting business or a landscaping business, these will probably be on Schedule C, not Schedule F. So you may have one of each. Okay, depreciation. What does this mean? So basically the government says there are things that you buy for your business that have long lifespan. So like you buy a tractor and the tractor is useful for many, many years. So you are not allowed to go to your P&L and say like, okay, I made, actually, I'm going to use the like fake profitable one. I made $15,000 worth of profit, but I bought a $15,000 tractor. So therefore I don't owe any taxes this year. Cause they're like, well, you're going to use that tractor for many years. So that's like kind of cheating. So what they do instead is they ask you to depreciate it, which means we're going to ask you to divide the cost over several years. So like, let's take our tractor, and let's say the IRS says your tractor has a 5-year useful life. Then you're going to take your $15,000 tractor, divide it by 5, and basically put $5,000 worth of expense into your P&L. And so we have a little quiz of just like, what counts as capital? So we have a barn. If you build or buy a barn for your farm, does that count as capital? Does it have a multi-year useful life? And maybe we can just do like on the cameras, like thumbs up, thumbs down for capital, not capital. And I can't see, so Alan and Andrew, if you guys want to say if there's answers. Looks like some yeses, it's capital. Yep, that's correct. What about if you build a new hayloft for your barn? So the barn already exists and you're adding like a, new capability to the barn. Does that have a multi-year life? Is that capital?
I don't know, but I would say no.
So that actually is a yes. So if you build an improvement, that does count as capital, and that's kind of a tricky one. So new hayloft for the barn, or maybe you like, have to repave a road on your farm, or you have to replace a section of fencing. Generally, that would count as capital as long as it's above, what's the threshold, Alan, like $300, something like that?
I think it's 2,500.
2,500. Okay.
Hmm.
Yeah.
But it changes, so I could be wrong on that.
Yeah. Oh, whoops. Sorry, I gave you the answer. So tractors are capital. But what if you have to get your tractor fixed? What if you have to do some tractor repair? Does that count as capital?
No.
No, that's correct. So yeah, that's just a regular maintenance expense. You can just deduct all that the first year. What about fencing?
Yes.
Yes. Yep. And again, usually because if it's, it's possible to just buy like $500 worth of fence, and that would not be capital. But if it's above that threshold, then you would count that. What about vegetable seeds?
I would say yes.
So this one's actually a no, since vegetables are annuals. And even though you might buy a bag of seeds that last several years, they classify that as not capital, like something that's just an expense. So you can deduct that whole thing your first year. Oh, sorry. I keep giving away the answers. But if you buy tree seedlings, because fruit and nut trees do have multi-year useful lives, that does count as capital.
Mm.
All right, what about if you buy like stocker cattle? So cattle that you're planning to raise for a year or so and then take to slaughter.
Yes.
So that one's actually no, because you're only planning to have them for a year or so. But then what if you have breeding stock? So cows you're planning to raise calves from.
Capital.
Yes, they do count as capital. Yeah, so as you guys can see, it gets confusing even just knowing like what counts or not. But again, the rule of thumb is, what has a multi-year life. And the IRS has a list of, what they count and like how long the useful lives are. Alan, if you can, Google that in the background and put that link to the chat just so people can have access to that list, I think that would be helpful. Okay, some other notes on federal taxes. So again, generally, you can deduct as an expense anything you use for your farm business. So again, if you live on the farm and you have like a personal internet bill that you also use for farm purposes, then you should deduct some of your internet bill. If you have like a pair of boots that you only use on the farm and you have to buy a new pair, that counts as a farm expense. And so this is why the good record keeping is helpful, because again, anything you can deduct as an expense means you are lowering your tax bill. One thing that's a little bit complicated about expenses is like, how do you handle vehicles? So if you have a farm truck or like a car or a van that you use for the farm. So there's two ways you can track this, but you have to pick one. So the first is mileage. So this is basically you keep track of how many miles you drive in a year, and the IRS gives you a rate. I think it's 67 cents per mile this year. And you say, okay, I drove 10,000 miles. It's 67 cents per mile this year. So that is $6,700 that I would claim as a vehicle expense this year. So if your vehicle is older, so generally if it's beyond its depreciation window, then generally you're going to get a bigger deduction that way. And mileage can be simpler to track because you just have to check the odometer at the beginning and the end of the year. And of course, if you're using it for personal purposes, you have to take out the personal trips. But again, you can just kind of come up with your best estimate throughout the year. And there are tools that help you track mileage if that's what you choose to do. The other thing you can do is actually track your actual expenses. So every time you fill up with gas, every time you take it to the shop, every time you buy some oil to change the oil, all of that kind of stuff, you would track, and then you can also add in depreciation. So if you buy a new car or a new truck, It's going to have value to depreciate the first several years. That depreciation number can be significant. So yeah, again, if your vehicle is newer, typically I would go with number 2. It can be a little bit harder to track, but you'll get a bigger deduction. You can also deduct soil and water conservation costs. So if you're doing anything on your farm for conservation, keep track of what that costs and make sure you deduct that as well. And then last thing around estimated payments, because I think this kind of takes people by surprise. If your farm is profitable and you're going to owe income tax, then you are supposed to make quarterly payments to the government. And this applies to all businesses and also to, personal income if you're not like automatically deducting from your W-2. Now, the nice thing is if you're a farmer, instead of having to do this quarterly, you only have to do it once a year by January 15th each year. So again, this is an estimate. So there's different methodologies for calculating this estimate. We can help with that if you have questions. But you'll pay your estimate, and then when it comes to like actually you do your tax return and say like you owe $1,200, you already paid $1,000 in the estimate, then you would just send the IRS an additional $200. Or if your estimate was $1,500 and you only owe $1,200, then you get a refund of $300. So that's kind of how that works. Any questions on federal tax stuff before we jump to state and local taxes? And also, I should have given this disclaimer earlier. So we obviously help farmers prep for tax season, but neither Alan nor I are CPAs. This is not like formal tax advice. We are just trying to give you enough information to kind of make good decisions about how to handle this.
I do have a question around trees. I know that you spoke about apple trees. If you planted, well, let's say for instance you didn't plant the trees, right? Let's assume that these trees are pine trees, and you purchased property that had roughly, let's say for instance, it had 3 stands of pine trees that were planted, and go to harvest those trees. Obviously, those trees are considered, well, since they're seedlings, would those trees have been still considered capital, or would that not be capital?
That is a good question. How if timber trees count as capital? Alan, do you know the answer to that question?
I'm actually not sure.
Yeah, my thought would be yes, but I would check the IRS website, and I think trees, the depreciation period is only like 4 years.
Okay.
So it also depend on how long ago the trees were planted. So if they are, and yeah, one thing about the IRS is like depreciation windows is they will give a certain number of years that does not reflect how long the thing is actually useful. So they might say like a new tractor, you depreciate it over 5 years when you're going to use your tractor for like way longer than 5 years. So it gets a little funky that way. But yeah, basically the trees, if they are older than that period of depreciation anyways, then it doesn't matter. You can't claim that expense anymore. Yeah.
So then do you know if you acquired the property, if the trees were much old, 10 years old, let's say for instance, the trees are 10 years old, and you acquired the property, would the new owner be responsible for any depreciation that were taken once the trees are harvested? Does that make sense what I'm asking?
Yeah. So the owner would not be responsible for depreciation for once the trees were harvested by the new owner, but the person who sold the property with the trees would need to go back and account for the fact that they sold that capital equipment kind of halfway through its useful life.
Okay.
And this is why kind of keeping track of your capital is important. And the same thing happens if like you bought a new tractor and you started depreciating it, but then you sold it after 2 years because it wasn't the right model or whatever. Then you would also be responsible for like accounting for that in your taxes. Same thing if like you buy breeding stock of cattle and then sell them. There's kind of implications there. And again, depreciation is the thing where like it can get very complicated very quickly because there's there's kind of like there's a standard way of doing it where you can do it and like not get in trouble, but there's also like optimal ways of doing it. So if you, again, sell a big property with a lot of young timber on it, or you sell a lot of breeding stock, or you like, buy lots of equipment in a year, like it's probably worth talking to a CPA just about like what's the optimal way to handle that depreciation to maximize your tax return. That's when a CPA is definitely worth their weight in gold.
Okay. Thank you.
Yeah. Any other questions?
I put the link to that farmer's tax guide, but it's super long and dense. So you could probably find answers to very specific questions in there.
Yeah,
But
yeah.
I put a screenshot of, some of those capital expenses.
So. All right. So luckily, once you've dealt with your federal taxes, your state and local taxes are actually a lot simpler. So state income taxes are pretty simple. Basically, they will take your federal return, and then the state of Georgia will, add on another percent that they want, and you'll just pay that. But you've already done all the work of kind of figuring it out. Gate card. Does everyone have a gate card? This is a very cool thing that basically lets farmers buy things for their farm without paying sales tax. So you get like a 7% discount on everything you buy for the farm because you don't have to pay your sales tax. You do have to apply for this. So if anyone does not have this, like go check out this program immediately because it is a great way to save money on everything you buy on the farm. So that is paying sales tax on stuff that you buy. But what about sales tax for the stuff that you sell? And unfortunately, it's a little complicated because each county and each city do it in a slightly different way. So most food is exempt from sales tax in Georgia. So if you're just selling, vegetables, eggs, meat, cheese, stuff like that, that is generally sales tax exempt, unless you are selling in DeKalb County, which for some reason charges a sales tax on food. They are the only county in Georgia that does this. So if you're at the Decatur Farmers Market or somewhere like that, just be aware of that. Now, if you are using Square or Shopify or like one of those other online platforms, these platforms will generally handle the sales tax part of it for you. But just be aware that, it's a little weird county by county. Now, the sales tax exemption does not apply if you sell things like prepared foods. So if you, make like breakfast sandwiches or soups or anything like that that you sell at the market, that generally does get sales taxed. If you make dietary supplements, so like if you grow turmeric and turn that into a supplement, or you grow herbs, that would generally count for sales tax. And then some other value-added products, so like soap, candles, etc., those do require sales tax. So again, just figure out which county you're selling in, which city you're selling in, like check what the rules are. And then how do you actually like pay your sales taxes? So again, if you're using Square or something, they can generally handle this for you. But if you have cash sales, etc., you will need to go to the Georgia Tax Center. So if you just Google Georgia Tax Center, you'll find this. And also something to be aware of is even if you don't owe sales taxes, like, oh, I only sell tomatoes. Sometimes the Georgia Tax Center will still get mad at you for not filing your sales tax returns every month. So for example, Good Agriculture, like we don't sell any things. We just sell services, which doesn't have sales tax. But every month we have to go in there and say like, yep, we still don't owe any sales tax, guys. And if we don't fill this out every month, like they do fine us like $8 a month or something. So just be aware that this is a thing. It may be better to just like add this to your to-do list to file it every month, just to make sure that they, don't secretly have you enrolled as like owing sales tax. Okay, so that's sales tax. There's also something called use tax, which basically means if you buy something out of state and then bring it back to Georgia, you are technically supposed to pay the state of Georgia 9% for buying the thing in another state. Now, to be honest with you, this does not get enforced very often, but just be aware it's a thing, especially if you buy it from a place that like doesn't charge you sales tax. Now, this is getting less common because, for example, if you most online vendors will handle this for you. So like if you buy something on Amazon for the farm and it's coming from, Montana or whatever, the Montana vendor will pay Georgia sales tax through Amazon because it's getting shipped to Georgia. So they kind of handle that already. But like, if you go buy like a tractor from someone over the state line in Tennessee, technically you are supposed to pay Georgia sales tax on that. That's called use tax. Just be aware that it's a thing, but I wouldn't worry about it too much. Okay, property taxes, everyone's favorite thing. So if you own your land, you have to pay property taxes. This is probably not a surprise. Now, the thing to do is there are a lot of exemptions around agriculture and conservation. And so if you do not have these exemptions for your land, make sure you do these before April 1st. Yes, Andrew, looks like Andrew has a question.
Sorry, just before you move on from sales tax, is there also local tax that is not exempt?
What do you mean local tax that is not exempt?
Like I thought there was like it's exempt from state of Georgia, but not from like local, county, and other sorts of taxes.
Yes. So the most sales tax, like basically there's kind of like a Georgia base rate and then different cities and counties add a percentage or not. But like I said, the only locality in Georgia that charges sales tax for food or other agriculture products is DeKalb. So hopefully for most people on this call, that means you don't owe any sales tax. But again, if you are selling food in DeKalb, then you owe sales tax. And if you're selling anything that's not food, so like, prepared foods, supplements, etc., those you will owe sales tax.
Got it. Thank you.
Yeah. So yeah, I think the thing to know on property taxes is just if you don't have these exemptions, apply for them before April 1st. So you got 8 months, plenty of time, or 6 months rather. Okay, so that was a big section about farm profitability and taxes. So I just want to pause for questions again before we move on.
Can you go back to that slide on property taxes real quick?
Yeah. Yeah. I guess the other thing to highlight about property taxes is if you live on the land, then you can also apply for a homestead exemption, which means, you just pay less property tax because you live there. So again, that is something you have to apply for. The homestead exemption is also something you have to apply for. It doesn't come with the land. So generally, if you buy farmland, oftentimes it will come with an agriculture assessment already, and then you don't have to do much on it. But if you like buy, a new house and you live there, you have to apply for the homestead exemption yourself, even if the previous owner also lives there. So that's just one thing to keep in mind.
And that 2,000, is that 2,000 off the assessed value, or is that 2,000 taken off total?
Off the taxes.
It is off the, okay.
Yeah, so it's pretty sizable. Yeah. Okay, so we already kind of talked about types of profitability and kind of breaking down your farm by enterprise. So I want to talk about just quickly, like, okay, so yes, I agree in concept that I should track my different farm enterprises, my different crops, my different livestock, my farmer's market versus my value-added products. But like, how do I actually do that? And so we help farmers break it down in kind of 3 different ways. So the first is direct allocation, which means like for every expense you have, you can tag that to a specific enterprise. So this works really well when it's something that goes into like actually producing the thing. So, if it's eggs, like the cost of the layer hens, the cost to feed them, the cost to like put the eggs in the packages, like, that stuff just belongs with the egg enterprise. And also things that go into selling those specific things. So again, like the packages for the eggs or, like the processing fee for livestock, things like that. So those things, it's like, okay, it's pretty clear which thing this expense goes to. But sometimes you have expenses that apply to multiple things. So like I bought a whole truckload of compost that I'm going to use for my fruits and my vegetables and, everything, and like the hay I'm growing for my cows. Okay, how do I split that? Or, like I buy $1,000 worth of irrigation tape that I'm going to use for my 4 different types of vegetables. So, one way you could do that is allocate by volume and say, okay, I used 20% of the compost for the tomatoes. So I'm going to put 20% of the cost of the compost into tomatoes. And so, especially if you're using a digital tool like, QuickBooks or something like that, you can split your cost. So it'll let you actually say like, okay, this one thing, I'm actually going to split it into 5 different things. And then the final way you can do this, basically is just like, hey, this is just like a general farm expense. I can't really like tag this to anything specific, or even if it's like theoretically possible for me to tag it to something specific. So like, I have a farm employee and this person spends like 17.5 minutes collecting eggs, and then like, 2.5 hours picking vegetables. It's like but that's just hard to do and it's not worth it. Then one good thing is just to allocate by revenue. So if half your revenue comes from eggs and half your revenue comes from vegetables, you could just split the cost 50-50. Or if the, vegetables are bringing in 80% of the revenue and the eggs are bringing in 20% of the revenue, you could say, I'm going to put 80% of the expenses on the vegetables, because that just, feels like it'll be kind of equivalent. So that's kind of like different ways you can do this. But again, to Paul's earlier point, this is kind of like the 201 version. So like just getting stuff categorized generally and being able to make your income statement is like the 101 version. And this is like for once you've gotten a pretty good handle on things and are ready for that kind of next level of insight. All right. So the third thing we're going to talk about is cash flow. So here's a farmer. We broke down her profit and loss every month. And so like a lot of farmers, she makes all of her money over the summer and loses a lot of money over the winter because, that's how farms work. So the question is like, is this farmer going to be able to pay her bills? And while folks are thinking, Alan, I know you have like, how you like to explain profitability versus cash flow. I don't know if you want to talk about that now.
Yeah, sure. Like, so the simplest way I like to think about it is like the P&L or the income statement is going to really show you the performance of the farm itself, whereas the cash flow statement that's where you're going to find that, did my bank account go up or down number? Because I know that sometimes it can be confusing. You say, well, I made a net profit of $20,000, but where's that $20,000? Well, maybe you spent $20,000 on a tractor or an attachment for a tractor, and that's going to be in the cash flow statement. And so really, maybe your bank account went up by $100 because once you netted out that large capital expense, that's where you'll find that number.
Yeah. So to Alan's point, for this farmer, the answer is we don't know if she's going to be able to pay her bills because it depends on how much money she started out with in her bank account. So you can see between January and February, she spends about $24,000 kind of preparing for planting season. And so if she doesn't have more than $24,000 in her bank account to start with, then she's going to be in trouble. And so this is why that cash flow statement is helpful. So the cash flow statement has 3 parts. So the first part is this cash from operations, which is basically the summary from your profit and loss statement. So these numbers, you already know how to come up with them. There's a question about inventory. So inventory can be an important part of this cash flow statement if your business requires carrying a lot of inventory. So for example, if you are if you sell beef, and you take all of your cattle to slaughter in, the fall after, the good grass season, and you just have like hundreds of thousands of dollars of beef in your freezer all winter, then like tracking inventory might be helpful because that's a lot of cash that's tied up for you. But if you're just selling vegetables and you've only got like a week's worth of vegetables in the cooler at any time, then you probably don't need to bother tracking this. Then cash from investment. So this is kind of what Alan was talking about, like, our example farmer, she was profitable for the year, so she seems like she should be in good shape from a cash perspective, but she had to build a new deer fence, and she had to, buy an implement for her tractor, and she had an opportunity to buy an extra acre of land, so she bought that. And then when you add all that up, it's like, whoa, even though these things don't show up in the profit and loss statement because they don't go into like the day-to-day operations of the farm, like she's making some big cash investments. And so her cash situation is actually pretty bad for the year. So again, generally when this happens, the answer is like, okay, well, let's get a loan for these things. So, this farmer, we helped her apply for a loan in January to kind of cover all of these investments that she was making. And that helped keep her closing balance in the green. So she didn't run out of money before, she started generating revenue again in April. So again, it's really helpful to keep an eye on this to know, am I going to have enough money in the bank account to keep running the farm? Any questions on that? Okay, well, you guys might say like, okay, well, that's like, I don't have to worry about historically how I paid my bills. Like that was last year. Like, how do I know if I'm going to be able to pay my bills this year? Like it hasn't happened yet. So great question. So just to talk a little bit about budgeting and business planning. So, our example farmer, so she kind of looked at last year's numbers and said like, okay, well, I'm still seeing some inflation from my vendors. Like I'm expecting my costs are going to have to go up, but I'm also noticing that like I'm charging a little bit less than like other you-pick strawberry farmers. So maybe I can raise my prices a little bit. So she kind of includes that in her budget. And she's also like, well, let me try raising rabbits. Like I think, rabbits are going to be a great deal. And she, kind of makes a budget for rabbits and, it looks like they're going to be pretty profitable for her. So maybe that's a good idea. And so, but one thing about budgeting is like, where are you getting these numbers from? And so for, the strawberries, she was like, okay, I'm using last year's numbers and then I'm using some like numbers I'm getting from quotes from vendors, et cetera. And like, those are good, reliable numbers. But then when we asked her like, hey, $80,000 worth of rabbit, like, how are you calculating that? And she's like, oh, well, I think I can sell 4,000 pounds of rabbit at $20 a pound. And so, you might say, like, okay, well, $20 a pound is like kind of ridiculous. But you're not going to be able to generate $20 a pound. Like, what happens if you sell for like $8 a pound instead? And so when we help her like run the numbers, we're like, okay, actually, if you sell rabbits at $8 a pound, then they're actually highly unprofitable. You should not do that. And so that's why this is kind of an example of like why budgeting is helpful, especially if you are thinking about changing something on your farm. And so where can you actually get these numbers from? So last year's numbers, again, are a really good place to start. Quotes from suppliers, ask other farmers, like, especially, you guys are all in the same geographic area. You're probably buying from the same vendors. Quotes from other farmers are going to be pretty reliable. You can ask folks like Andrew. You can ask your like local university extension agent. You can Google stuff. Our rule of thumb is like any number you get on Google, you should assume it's like 10 to 20% worse than what you see there. So, you should assume your costs are going to be 10 to 20% higher. You should assume your revenues are going to be a little bit lower. And also we can help with this stuff too. So we have some farmer data we can help with and kind of help you think through like what's going to be reasonable. Any questions about budgeting, business planning? I know this is a very deep topic. We just skimmed off the top of this, so we can do a deeper session on this if this one's helpful. All right, so last topic, which is also the last of the financial statements. So we went over the income statement or the profit and loss statement. We went over the cash flow statement, and now we're going to talk about the balance sheet. So remember, our example farmer, she made all this investment into equipment and infrastructure and whatnot. And like, it hurt her on the cash flow statement, but like, it's good to buy stuff for your farm, right? And like make those investments. And so where does that show up? And so the answer is on your balance sheet. So a balance sheet is 3 different things. So the first set of things is your assets. So this is anything that is, valuable on the farm. So this is cash you have in the bank. It's crops you have in the ground. It's stuff you have in your inventory. And then intermediate assets are stuff that like you could sell if you needed to, but they're not liquid assets immediately. So breeding livestock, equipment and vehicles, tractors, etc. And then your long-term assets are your land, your building. So like the farmer's deer fencing would show up here. And so when you add all those things together, it's like this is the like all of the positive things on the farm, all the things on the farm that are valuable to me. Then the other side of the balance sheet are the liabilities. So this is like basically like what you owe money for. So current liabilities are basically anything you're going to owe in the next 12 months. So your tractor loans that are payable in the next 12 months, your mortgages, your taxes. Then the intermediate liabilities are, stuff you're going to owe over the next 5 to 7 years. So generally it's the balance on like your tractor loans. And, if you got like an operating loan from FSA or your ag bank, that would go here too. And then long-term liabilities, anything 10 years plus. So oftentimes like your farm loan, your house mortgage, et cetera, will go on here. And so then what you do is you take the assets minus the liabilities, and then you get what's called owner's equity, which is like your farm's wealth. So how much wealth is the farm generating for you and your family? Any questions about how that math works? And this balance sheet is, when we work with farmers, we update this every month for them, but generally you can get away with updating this one less because it won't change that fast. But you do want to keep an eye on that equity and make sure it is going up over time, and that you are using the farm to be able to build wealth for you and your family.
So I have a question around the growing crops. Is that a retail rate, or is that how is that number calculated?
Yeah, so the two methodologies that are the most common. So one is the retail rate, so what you would sell them for.
Okay.
And then the second methodology is if you have crop insurance, the value of the crop insurance, which is kind of like the like if something catastrophic happens, you would have at least this much.
Okay. You spoke about fencing, right? So is that fencing based off of the current rate that it would cost to produce that fence, or how is that calculated?
Yeah. So it kind of gets back to this is like not an exact science, especially when it comes to stuff like barns and fencing and like farm infrastructure, because like old fencing is not as valuable as if you were going to go out and like build all new fence today, right? So if it was going to cost you $20,000 to refence everything, you would not want to value the current fence at $20,000. So one way you could do this is to say, okay, well, I'm just going to take like if it's newer fence, I will take like the value I haven't depreciated yet. So again, if it took me $20,000 new and the IRS said it had a 10-year life and I'm depreciating $2,000 every year, then, in year 3, there might be like $16,000 left. And so that might be the value you put on there. But then the problem is like, okay, well, after the 10 years, the fence is still useful, but it's not, but like the IRS says it's worth $0, but I know it's not worth $0. What value should I use? And like for something like a tractor, it's easier because you can go to like the used tractor market and say like, okay, I could sell this thing for $5,000 if I needed to. But something like a fence, it's like, how much is this adding to the property value if I were going to sell the whole property? And like, that's a hard thing to estimate. So just use your best guess.
Okay.
Yeah.
I can add on to that too. So it's like, I guess some things are just easier to be more straightforward and do like just the cost basis. So that can be the cost of the actual fencing, even the cost of the installation of the fencing you can throw in there too. But then other things like Alex mentioned, like a tractor or any other piece of machinery, you could do it based off of market value. And balance sheet is interesting because you can kind of craft it depending on how like conservative you want to be or maybe how optimistic you want to be. So like if you're like, man, I think I've really kept this tractor in good condition, I can actually maybe even make a gain on it, which I know that sounds kind of crazy, but I've seen it happen before where someone bought a tractor on their taxes, they're depreciating it. They're doing that, divided by 7, and every year they're putting it on their, as a depreciation expense. But then they turn around and actually sold it for more than what they purchased it for. So the balance sheet is kind of a interesting like living document that it's just going to depend on the use too. So like if you're going to a bank and you want to show them a really accurate picture of your operation, so that they can see your assets, liabilities. It just depends on how you want to craft it, is what I'm trying to say, I guess.
Okay, thanks.
Yeah, and I'm wondering if this is actually a good tool or a snapshot of talking about farm succession. Like, how do we plan for someone to take over the farm? Like, which of these numbers, like, how long would it take? Would 1 year snapshot like this be something they could talk to a younger farmer and kind of give them a good idea of the operation, or what parts of this is not good for that?
Yeah. So a balance sheet is a snapshot in time. So, and yes, this is going to be something super valuable when you're talking with a younger farmer. And but you really would want to have all three of these financial statements because each of them kind of give a different flavor of the current situation of the farm. So there are a lot of farms out there that are unprofitable and they're cash negative, but they have a lot of farm equity because the land's really valuable. That's a very common situation. Or, they might have like a ton of debt, but the business is doing really well. It's profitable, it's generating good cash flow. And so, the farm, the equity might be on an upward trajectory. And so kind of all three of these will give kind of both generations of farmers an idea of just kind of like where the farm is and what direction it's heading in at the present moment.
And those three would be the profit and loss, and then just the balance, or is this also
Yeah.
called the balance?
This is the balance sheet, and then the third one is the cash flow statement, which is this guy.
Yeah, and
So
so
it
like as an example here, so if you look at January, $15,000 cash outflow, you purchase some infrastructure, that would be a positive number on your balance sheet. It's increasing your asset. Whereas if it was a positive number on your cash flow statement, meaning that probably means you sold something and you gained some money, then that asset would be reduced on your balance sheet because you don't own it anymore.
Got it. Thank you.
And so we'll do some questions as well, but I think this is a good, thing to say here is like there's a lot of places you can go for help on this stuff. And this is one thing that we do a lot of is helping farmers keep up with all of this stuff. So we have three kind of tiers of financial management where the basic tier really helps you with the bookkeeping and like preparing these three financial statements every month. The essentials package is kind of getting into more of that financial analysis and really breaking down like how things are going on the farm, and also helping with some of those tax forms. And then the premium is including more advanced reporting like that profitability by enterprise, and then also handling some stuff like budgeting and payroll and whatnot. And so we are, we want to provide all of these things at farmer friendly prices. So you'll notice that the basics level starts at just $75 a month, which is, almost the same price as a QuickBooks subscription. So if any of you guys are interested in working with us, we would love to chat with you about, how we can help you with this stuff. We're also happy to like send templates and answer questions if you want to do it yourself, but we know that this is a lot. And so we want to help if we can. We are also running a special for National Farmers Day, which is this month. And so we're offering 40% off the first 3 months. So if you guys just want to try us out for a few months and see if you like us, we are offering 40% off of these prices. And we don't make you sign long-term contracts. You guys can quit at any time. You can also like go up and down between these tiers at any time, just depending on what you need. So, we really just want to be here and help you succeed as a farm however we can. So yeah, other tools and resources. So there are accounting software really can be helpful for this kind of stuff just because it digitizes a lot of what we've talked about. So, QuickBooks and Xero are the two most common types. But there's, lots of flavors of accounting software out of there. Sales tracking software. So Square, Shopify, Local Line for CSAs are all really helpful. Farm management software does help with a little bit of this as well, especially to kind of track your expenses by enterprise. We have templates we can send you. Veggie Compass is another like good online resource that has templates for this. And then again, if you really just are overwhelmed by this stuff or just don't have time or, you have other priorities on the farm, like hire a bookkeeper. We are one, we are cheap and we are good. But there's lots of other good options out there as well. So yeah, so I'll put our contact information up here and then happy to take any questions that are left. Although you guys were really good about asking questions along the way. So we appreciate that. Ellen, are there any things that come up as questions frequently that you think we didn't cover today?
Thanks. Austin said great presentation. I mean, yeah, there's always a lot, but off the top of my head, I can't think of like any. I think we did a pretty decent job of covering the basics. I know that one thing I like to sit on, and I recommend, farmers try to sit with it, is that cash flow statement, because it is kind of the glue between your profit and loss in your balance sheet. And so I just think it's really good to understand what that's saying, because it's so concise and helpful to understand the cash flow operations, investments, and financing. You get to understand, how's your business operation doing, how much are you putting into investing in the farm, and then also how much debt are you having to pay. And it's like it kind of combines everything. And so it's a really helpful thing to get acquainted with. And I feel like sometimes it doesn't get as much love as like the profit and loss.
Yeah, I thought that was a great presentation. I love the little tip about don't double dip with, accounting for oil changes in gasoline and your mileage for the farm. That was a good little tip. And then I had a question, since y'all use Zero for accounting software, do you have any issues, like if a farmer started using that and then got with their CPA, do CPAs have any issue, or is it just pretty standard to take whatever they get and do what they need
Yeah.
with it?
It's been pretty good so far. Because we can add a CPA onto the account, so send them an invite, and then they get access to every single transaction that we've categorized as well, in addition to just the reports themselves.
And they're
So,
not just totally discombobulated with the new interface or not being QuickBooks.
oh, that's a good question. Yeah, I mean, so QuickBooks is definitely more popular, but there are definitely accountants or CPAs, I should say, out there that are pretty well versed in all the different softwares out there. But I will add, uh, on that basics tier that we offer that Alex mentioned, it used to be just Zero, as you see on the bottom there, just Zero. But there actually is a version of QuickBooks, like a simplified version that we can also. It's like if you had experience with QuickBooks and maybe you prefer that, we can also work with that as well.
Yeah, it's not that I prefer it. It's just I was always scared that someone else wouldn't want to work with another software.
Yeah, well, that's a good point. But they've grown a lot. They're an Australian-based company, and they're really going after North America. So, and we've liked them too. They're very simple, pretty intuitive. That would be, I guess, my gripe. There's pros and cons to both. My gripe with QuickBooks is that they make it too easy to screw everything up, and so Zero will kind of throw you errors a little bit more often, which I appreciate.
Yeah, I'm also surprised by just the number of CPAs out there we've worked with who don't like to use any of these softwares and ask us to send them like an Excel of the farmer's data. So that happens too.
That's true too. Yeah.
Yeah, but if a CPA can figure out QuickBooks, they can figure out Zero or any of these other ones. So I wouldn't let that stop you. Just use whatever one you like best. And if you guys want a Zero copy or a QuickBooks copy, and don't necessarily want to be like, want to do your own bookkeeping, we can still offer you a discount through like our accounting firm if you want a discount and you are not already our customer of one of those two. And it's also pretty easy to switch from one to the other. So even if all of your stuff is on QuickBooks and you want to switch to Zero or vice versa, like that's pretty doable. And we can help with that as well.
I have a question if no one else does, but I don't want to interrupt anyone else. Quick question about paying yourself from your farm to use a 1099 miscellaneous. Is there different ways to do it?
That's a great question. Sorry, Alan, I have an answer, but you probably have a better answer, so I can let you go if you want.
I guess like my lame canned answer is, CPA will have the better tax strategy answer for you. But yeah, I mean, so basically you could, again, this is not legal advice, but you could set it up so that you can pay yourself like as a W-2 employee, depending on how you're incorporated or whatever, or you can just do like an owner distribution. Those are the two most common ways that we see people pay themselves. But yeah, Alex, if you want to add on to that.
Yeah. I mean, the first answer is if you are an LLC, it basically doesn't matter because when it comes to tax time, like you and your farm are kind of considered the same entity. So it's all pass through income anyways. Again, where it gets more complicated is if the farm is a corporation, which to be honest is less common. And then there are tax implications of like paying yourself versus taking a dividend, and whatnot. But since you mentioned 1099, since we didn't cover that in the tax section, so if you have any employees and you've paid anyone more than $600 in a year, you are supposed to send them either their W-2 or their 1099 by January 31st of every year. So this is another reason why the record keeping is important, because that's a pretty quick turnaround from like December 31st, their last day of work, and then January 31st when you have to send them this document. So again, if you have those records already clean, it's very easy to just send them these forms. But if you're using any sort of payroll software, so like OnPay or like QuickBooks has a payroll system, it's not great, but it exists. Like they will generally send those forms for you automatically. So that's helpful if you have a lot of employees.
Thank you.
Yeah, good questions. All right, well, if there aren't any other questions, we can wrap up because I know we've already gone a little bit past the time we originally said we would. But Alan's and my contact information is here, so definitely feel free to reach out to us anytime. We're happy to answer easy questions. And again, if you guys do need a little bit more robust help with any of this stuff, we would love to support you and your farm.
Yeah, huge thank you for filling this kind of much needed role in the accounting and marketing services for farmers, all types of farms. So thank you all.
Yeah, thanks so much for having us, Andrew.
Yeah, thank you.
All right, folks. Well, hope you have a good end of the growing and farmers market season, and let us know how we can help. We love working with farms like you guys. So thank you for doing what you do, and let us know if we can ever help. And go dogs.